Welcome to the Rain or Shine PRF podcast, where we talk about all things PRF. I'm Ross Bronson, and I'll be hosting this podcast today. Today, we're going to talk a little bit about when do you have to pay a PRF premium, and I'm joined by Jill Edman and Brooke White today, and we're going to have a little discussion about PRF and when you will need to pay a PRF premium. Jill, what if you'd go ahead and introduce yourself, and then we'll have Brooke introduce herself and kind of her role and both of your roles in the company, and then we'll dive into some information.
Yes, so I'm Jill Edman. I'm a sales manager at Red Summit Advisors. I've been here for 3 years and work all things agents and customer service.
Great, thank you. Brooke.
Hi, I'm Brooke White. I'm an agent with Red Summit Advisors. Going on 5 years now.
Awesome. So, Brooke, let's start with you. First off, can you just kind of give us a quick overview of PRF, what it is, and how it works?
Right. PRF Insurance is pasture, range, and forage insurance. It's designed to help ranchers when we don't get enough precipitation or rainfall to grow the grass we need. It's similar to row crop insurance that row crop farmers have had for years. This was developed for ranchers.
Yeah, and I really appreciate that analogy of the row crop because farmers really have had crop insurance for years, and it's exciting to have this opportunity for ranchers. So let's talk a little bit about premium, since that's the whole point. Is there a premium due up front?
There's no premium due up front. So typically, you sign a policy anywhere between September and November 15th of the previous year that the policy is to take place. So, for instance, you'd sign up in the fall. The policy takes place in January of the next year. So there's no premium up front. The policy is designed to be self-funding. So anytime you trigger an indemnity, it goes to pay the premium first. When that premium's been paid, then the indemnity checks come directly to you.
Okay, and tell me real quick, kind of what triggers an indemnity? Why would you get an indemnity to go towards that premium?
So an indemnity occurs when your coverage is in 2-month time periods that we call intervals. When any one of those 2-month time periods that you have coverage in gets less than the 70-year average of rainfall amount, then an indemnity is paid to you. Or okay. In this case, your premium first, and then once your premium has been satisfied, then the indemnity goes directly to the producer.
And so what is a scenario where we're going to get to where I'm going to owe a premium?
So a producer may owe a premium at some point at some point that they have PRF insurance. A couple of different things can happen. So, for instance, if we know it's going to be wet in the spring and we place the majority of your coverage in the fall, then you may get a bill for the premium. The bills come out around September 1st. But you still have coverage through the fall, so you still have time for that premium to get paid. Another scenario that should happen to most everybody is at some point you're going to have excessive amount of moisture, and you will get a bill you will owe part of your premium, if not all of your premium. And what I mean by part of your premium is if some of the intervals are dry, that will go down to pay your premium. But then let's say it's not, you get excessive moisture the rest of the year over that 70-year average, and it's not quite enough to pay down your premium, then you will receive a bill for the remaining amount.
Yeah, and it's kind of a double-edged sword because you would have gotten really good moisture, and hopefully it's going to help your range net a little bit, but you will owe a premium. So thanks, Brooke. Jill, let's transition over to you for a minute here. So we're at the end of the summer. We owe a premium. So what does that look like? When do we have to pay it? I guess let's start there. When do we have to pay it?
Sure. So premium would be due by November 30th. That's a check postmarked by that date if you're choosing to pay off your remaining balance. There are other options out there, such as payment plans and things like that offered directly from the authorized insurance provider. So depending on what you select to do, a decision would have to be made by November 30th.
And what's that November 30th deadline? Why does that matter?
It matters because interest accrues beginning December 1st. And so we have a choice to make here. We either cover the bill that's due, or we have to sign a payment arrangement with the authorized insurance provider with a promise to pay in the installment program that they're offering before interest begins to tie to the premium itself.
Okay. And I've also heard of some producers who maybe didn't want to pay it up front out of their own pocket and maybe didn't want to do the payment plan. Some folks I've heard have used like maybe part of their operating line of credit to pay it in bulk, and that would need to be done by September 30th. Is that correct?
It would be November 30th.
For a bulk payment?
Uh-huh.
Okay.
Yes, any payments or any arrangements have to just be made by November 30th.
And that's to avoid the interest charges.
Correct.
Really specifically.
Uh-huh.
Great. Thank you so much. So as we've clearly stated, the PRF program isn't a fail-safe. You will owe premium at some point based off of several different factors. But the important thing is that in the long run, most operations that are doing PRF are coming out net positive. So what I encourage everyone who's listening to this or watching this is to reach out to us at Red Summit Advisors, and we can get you some information about how a PRF policy would have performed on your property over time. And then at least you have an educated decision ahead of you. If the numbers look good and appealing, then we can get you a policy for sure. Thanks for joining us.